Hey guys, welcome back to my channel. Happy New Year! This is my first video in 2020. So for the first video for the year, I want to kick it off by sharing with you guys how to invest in stocks in 2020. If learning how to invest in stocks is one of your 2020 goals, then this video is for you. In this video, I'll be covering how to invest in stocks, especially if you're a beginner in the stock market, and sharing step-by-step guide to starting in the stock market so that you can invest and trade the right way and invest safely. So if you want to learn how to invest in stocks and how to invest safely, make sure you stay till the end of the video because I'll be revealing to you two powerful strategies that you can use to get started in the stock market. So before I share with you the strategies, I'd like to take the time first to share a friendly advice with you. The advice is invest only in money that you are able to lose. That means that if you lose all your money in the stock market, while it might mean cutting down on certain luxuries, you are still able to afford your daily necessities like rent, transportation, and food. So if you lose all your money in the stock market, you shouldn't have to live on the streets or borrow money or anything like that. Therefore, if you want to invest in the stock market, you should set aside some money on top of your savings and only invest that amount. Now that I've shared with you that advice, let's take a look at the two strategies that most investors and traders use that allow them to make money in the stock market. The first strategy is fundamental analysis. This is what 90% of long-term investors use. And the most successful and famous investor who uses this strategy is Warren Buffett. Fundamental analysis is basically the analysis of a company's financial value to determine whether at the current stock price, the company is undervalued, overvalued, or fair valued. As investors, we ideally want to buy a company when it's undervalued. So we say that a company is undervalued when the company's current stock price is lower than its value, which we determine by studying the company's financial statements. The three financial statements that most investors look at are the company's balance sheet, income statement, and statement of cash flow. While understanding and analyzing the financial statements of companies is beyond the scope of this video because of time constraints, investors use the data they get from these financial statements to derive the financial ratios, which help them to analyze the value of a company and determine what it's worth, and then compare this value to the current market price. So some of the financial ratios that investors use to determine whether a company is overvalued, fair valued, or undervalued are the price to earnings ratio, the price to earnings growth ratio or PEG ratio, and the price to sales ratio. I cover these financial ratios in my other videos such as this, and this. If you want to learn more about these financial ratios and how to use them to determine whether a company is overvalued, fair valued, or undervalued, make sure to check those videos out. In addition to those financial ratios, or as an alternative, some investors calculate the intrinsic value of these companies by using the data from the company's financial statements. If the intrinsic value of the company is lower than the current share price of the company by a large enough margin, then this company is said to be overvalued. So if the value of the company is higher than what the company is currently going for by a large enough margin, then this company is said to be undervalued. So fundamental analysis is then identifying companies whose value is lower than the current price of a company and then buying these companies with views that the stock price of these companies will rise to its value or higher. To help you better understand why many investors use fundamental analysis as a strategy in the stock market, let me give you an analogy. Fundamental analysis is kind of similar to Apple selling a brand new legitimate iPhone 11 for $50. It's unlikely to happen, but if it were true, will you buy it for $50? You will buy it, right? Because you know that you can sell it for way more than $50 even if you don't know the exact retail price of the iPhone and you are not an Apple retailer. So despite all of that, you know that the iPhone 11 is worth at least $500 if not more if you sell it to someone else. So you'll buy the phone at $50 because you know the value is worth around $500, whether it's $510 or $545 or even $600. It doesn't really matter because at the end of the day, you still stand to make a decent profit by selling the phone within those price range. The same thing applies for fundamental analysis. With fundamental analysis, we are not looking to find the exact value of the company. We are just looking for a range of prices that the company is worth, and if the current stock price of the company is lower than that value by a large enough margin, then that company represents a good investment opportunity for investors to make money. And that is how fundamental analysis can be used by investors in the stock market. The second strategy is technical analysis. While technical analysis is a strategy that short to medium term investors and traders use usually, if you are a long-term investor, I believe technical analysis can help your investing too. So technical analysis is very different to fundamental analysis. It's a whole other beast. So fundamental analysis is the study of companies' financial statements and financial data and numbers, while technical analysis skips all of that and focuses purely on price charts. This is not to say that technical analysts don't believe in the importance of financial data and numbers. Instead, they believe that all these financial data and numbers are all represented on the price charts already. So because prices on the price chart represents the decisions that investors make and take in the stock market, and since the actions of these investors are influenced by their study of the financial data and numbers of companies, technical analysts believe that all this information are therefore reflected on the price charts. So instead of studying financial data and numbers, technical analysts study price charts. That is the difference between fundamental analysis and technical analysis. So what do these technical analysts study on the price charts? They study technical indicators, which include but is not limited to candlesticks, moving averages, Bollinger Bands. So check out my video on candlestick patterns here. So technical analysis is the study of price charts and the technical indicators in these charts. Now that you know these two strategies that you can use in the stock market, fundamental and technical analysis, how do you get started? Learn fundamental and technical analysis by reading books and watching videos such as this. So one of the best books on fundamental analysis is Intelligent Investor by Benjamin Graham. So this book can be quite heavy, but if you can get through the content, you definitely gain a lot of knowledge from one of the giants in the investing world. So on top of Intelligent Investor by Benjamin Graham, I also highly recommend reading these 5 investing books. So you can check them out in my video over here. So make sure you learn as much as possible before you start investing and trading in the stock market. Because one of the biggest mistakes that beginners make is thinking that they can start investing and trading in the stock market without the proper foundation, just because it's easy to click a button and buy a stock in the stock market. So these beginners are also the ones that lose money in the stock market. So make sure you equip yourself with the proper foundation and knowledge in the stock market, such as learning fundamental and technical analysis before you start investing and trading. After you have equipped yourself with the knowledge and foundation, the next step is to open an account with a broker. So there are many brokers available, so do your research and see which broker suit your needs best. So one thing that I look out for when choosing a broker is the fee that they charge per transaction or transaction fee. Since I buy and sell stocks on a regular basis, I make sure that the broker I use has competitive transaction fees. Again, there are many things to look out for in a broker, so that is just one thing that I personally look out for when choosing my broker. So make sure you do your own research and choose the broker that best suit your investing and trading needs. The next step is to select a stock that you know well, so it can be stocks of companies that you use in your daily life. For example, if you use iPhone and you're a fan of Apple and know the company well, then you can look into Apple stock as one of the first stocks to invest in. You should not base your investing decision solely on your consumer preference, but that is a good place to start. So after selecting a company that you know well, the next step is to do your research using fundamental and technical analysis that I shared earlier on. So if the company passes the criteria, then you have a stock to invest in. So that's the whole investing process there for you. The first step is to equip yourself with the right investing and trading knowledge and foundation by reading books, watching videos, or even attending courses. After that, you want to open an account with a broker so that you can start buying and investing in stocks. So how do you select which stocks to invest in? One way is to look around you in your daily life and see what are the products of companies that you are using in your day-to-day life. So an example I shared earlier on is Apple, or let's say you're an active user on Facebook. You can also choose to look into Facebook as a company to invest in. Once you got a few companies, the next thing is to do your research on them with the two strategies that I shared with you earlier on: fundamental and technical analysis. So if the companies pass the criteria, then you've got yourself a company worth investing in. That's the investing guide to get you started on your investing journey in 2020. So what are your goals for investing and trading for 2020? Let me know in the comments below. If you want to learn more and improve your investing and trading, make sure you subscribe to my channel because I'll be releasing one new video every week to help you in your investing and trading journey in this new year. So I'll see you in the other videos to your financial success.